The Philippine economy posted slightly slower growth in the second quarter of the year as exports and the manufacturing side also post dismal performance. But some economists are saying there is still hope. We have Tubayan, senior reporter from BusinessWorld, to talk to us more about this. EJ, it looks probable that the country will see growth below the targets for this year and 2019, but economists still see it as a positive development. Why is this?
Well, again, the slower growth is actually driven by a wider trade deficit as of the second quarter due to the slowdown in exports, but a surge in imported goods. However, economists said that it's a positive development since these imports are actually largely composed of capital equipment such as machinery and heavy equipment that signals that that the economy can expand its capacity to produce in the medium to long term, which will enable the country to expand its manufacturing base and also deliver heavy infrastructure projects. However, the importation does not necessarily reflect into the GDP, as it will take some time for these capital equipment to convert raw materials into more productive goods that will reflect into the GDP.
Okay, EJ, we have grown above the potential of 6% in previous quarters. Are we seeing signs of overheating for the economy, as shown by the high inflation rates recently?
Okay, so overheating occurs when the country's capacity to produce can't match consumer demand. However, the analysts said that is not the case currently because they said that inflation is actually driven by higher input costs faced by firms, and that's due to, again, the high global fuel prices in the external market, as well as a weaker peso, and of course, the effects of the tax reform law. However, the analysts also acknowledge some supply-side issues, as also acknowledged by the government. However, the weight is still really on fuel input costs and the weaker peso.
EJ Tubayan, senior reporter from BusinessWorld, thank you for joining us on The Big Story.